Joe Lavorgna, great to meet you in person.
Same here. Great to meet you as well.
You guys at Treasury, I don't think, I'll be honest with you, I've followed politics for a little bit now, and I don't think until the Trump administration have I talked more about the Treasury than I have in this administration.
In a good way, I know that for a fact. Secretary Besson is a rock star.
Yeah, he is. And I say that with all due respect. It's sort of amusing to me. The Treasury Secretary is not typically thought of as the rock star in administration.
Well, President Trump has a vision and is a leader, and Secretary Besson's just done a great job fulfilling the president's goals and ambitions, and we're very happy that things are working out great.
I don't have the slightest idea, so I'm asking you if you could kind of quantify it. When you talk about commerce and you talk about Treasury and the other departments that may need to work together, or at least counsel together, I know we've talked before with Mr. Hassett about, it's not that you all see eye to eye on everything, but he said everyone's friendly. There's a congenial relationship.
I think that's exactly correct. I mean, look at the results. The one big beautiful bill got passed on July 4th, which very few people thought the president would be able to get done. And Secretary Besson was instrumental in helping that, working with the Congress, getting that done. We've got the framework trade deals with Secretary Besson, Secretary Lutnick, and Ambassador Greer have worked on. And all the fears that people worried about back in April did not come to pass. They were completely wrong. The president was right. So yes, there's a very good working relationship and a real professionalism and competency. And because of that, the American people, the economy are going to benefit from it.
Tariffs specifically, have people, and I have conservative friends, Trump voters, who when Liberation Day came, he works for the Fed, I won't name him, but he works for a Federal Reserve Bank, and he texted me and he said, you have to do whatever you can do to tell the Trump administration they got to stop this tariff thing. And I said, I don't know anything about it, but I'm going to be calm, not that you'd listen to me anyway, and I'm going to wait to see how it plays out. A few months have passed, and
no, that's exactly. I mean, if you
wasn't, but there were
totally
conservatives
wrong.
that were
Yeah,
panicked,
no,
right?
They were
you
totally
heard from
wrong.
them.
Oh, of course, no. I wasn't at Treasury at that point in time, but being in the private sector, I heard many of those same worries, which were totally unfounded. I said as much at the time. The president, Secretary Besson, others alluded to that as well. What we've got so far is record tariff revenue. The tariffs really kicked in force in April, and yet we've seen no inflation. In fact, goods inflation, broadly speaking, since the president took office, is down almost half a point at annual rates, basically flat. That's where you'd see tariffs. There's been no tariff effect in the data, yet we're still hearing people talk about tariffs being there. The fact that they're saying they're there when the data suggests the opposite is another way that the experts and the pundits were wrong. President Trump was right, because we're collecting the revenue. We haven't had the inflationary impact. We haven't had all those fears that your friend was suggesting to you. They've all been unfounded and completely proven incorrect.
I know once upon a time this country truly operated on an income basis strictly on tariffs. That used to be the way we functioned pre-income tax. Is that out of the question today? That's never achievable again in your view?
That I don't know, but like a lot of economists will talk about, smooth-hauling and tariffs back in like the 20s, late 20s, early 30s. The problem is back then the U.S. was a manufacturing powerhouse. Now, because of unfair trade, we're the exact opposite. The president wants to level the playing field so that American businesses and workers can thrive. So tariffs have the exact opposite effect. And the people that were railing against the tariffs don't understand the economic history. They don't understand what the presidents wanted to do. Maybe it was because they personally didn't like the president, but the president has a vision of how things are going to operate. You've got low tax rates. You've got friendly, pro-growth, prudent business regulation. You've got cheap and abundant energy, which you need if you want to make things. You need the energy to harness and power that building. The president knows this. He instinctively knows this. His policies were incredibly effective in the first term. We've got the one big beautiful bill that's now been passed. So you've got the CapEx boom that's taken place. You're going to have a lot of building. The President Trump's a builder. We've got factories we're going to build, data centers related to AI. You're going to pay Americans great wages to build those. You're going to pay Americans then to work in those factories. We're going to make things again. These are things the president has talked about for decades. People finally are listening. They're paying attention. The financial markets know where things are going. We've had the biggest recovery in the stock market after a correction in the history of the market. So the market learned real quickly what the president was trying to do, and the outlook in the future are just fantastic.
Can you talk to me about this investment in Intel, this 10% stake by taxpayers? What does that mean? And explain to me like I'm 5 when we talk about something called the Sovereign Wealth Fund, and maybe that's where President Trump would like to head as I read. What does that mean to average Americans? What should we understand about all that?
In the Science and Chips Act, the Biden administration was effectively giving Intel money, and this administration was like, why are we doing that? We need to be more thoughtful and prudent on that, how that money is used. It would make more sense to take an equity share, because they already have the government's money, and that way, when Intel recovers, the U.S. taxpayer will benefit from that. And if at some point there is a sovereign wealth fund, as many other countries have, that would be one of the investments in the fund. Whether that happens or not, I don't know. I'm not privy to those discussions, but that's sort of how it works. In other words, basically right-sizing the government's involvement in a way that's much more economically efficient to taxpayers' benefit.
Is this different than, say, the auto bailouts of the early 2000s?
Yes, it's completely different, because the government, Intel was already getting the government's money. The president wanted to be more creative in a way that the U.S. taxpayer would benefit should the company turn itself around and do well, which, and I don't want to speak specifically on Intel, but given the economy the president had in the first term and his pro-business approach, you would hope good things happen.
So instead of giving it away, it's an investment. Hopefully we get a return.
And non-voting shares, so the government's not going to be telling Intel what to do.
Not analogous entirely, but it's the same deal as instead of just giving weapons to Ukraine, selling weapons to the EU, and if they'd like to give them to Ukraine, that's revenue for us. About the same way to think about it?
I wouldn't think of it necessarily that way, but I understand what you're saying.
Yeah, okay. Anyway, where is there, how is it a net benefit? It's not just giving it away.
And again, the president's a businessman. He's extraordinarily successful. He knows how the real world operates. He's not an academician in an ivory tower telling you how the world operates in hieroglyphics on a screen or a board you write stuff on. So he understands that, and that's what's important.
May I ask you about the South Korean visit today and where tariffs stand? Is Treasury pleased at this point with where negotiations stand? I know India hasn't come on as fast as maybe would have liked. China's still kind of lingering out there. Where do things stand globally right now?
Well, my colleague and I, when we were walking over to do this, we saw the delegation. So we should have asked them.
Yeah.
We'll see what happens.
We'll see if they're smiling when they come out
that's
today.
That's right. We'll see what happens.
That's literally happening as we speak. Can you? I know you're not in the room, neither am I. But can you guess?
Yeah, I don't want it. I don't want
no
it.
Idea?
I've learned over the years, don't guess.
Can you tell me what kind of things would be discussed generally, broadly?
Well, here's what I would say: the U.S., President Trump wants the trade deals to be in the best interest of the U.S. He instinctively understands the U.S. has the leverage. Secretary Besson's done a great job in negotiating these framework deals. And we know in the case of India, the president is not going to do a deal. He doesn't just to do a deal. He wants to do a deal that benefits U.S. households, businesses, consumers. So all I could say is I'd be confident that whatever is ultimately reached, the president will know if it's the best deal he could get, and given his history of negotiations, I think we've got a lot of faith he knows what he's doing.
What is the biggest challenge with China, do you think? I know there have been two what have been called successful meetings with Secretary Besson and China. We're not quite there yet. What's the hang-up?
Well, it's the second biggest economy in the world, and there's a lot of integration, and the administration wants to make sure it gets things right, wants to be thoughtful. And they're following a very prudent course. And as you said, there's progress being made. And it's always good when two negotiators are talking. And ultimately, it'll rest with President Trump on what he wants to do. But certainly, they're talking, and hopefully we'll get something done at some point.
Jerome Powell, the Federal Reserve, lowering interest rates is something President Trump wants very, very much. I think Secretary Besson has said the same. But it doesn't look like Jerome Powell's going anywhere until his term is up. Is that about right?
That's what the chair has said, though in the Trump was right about everything again, the Fed does look like it's going to pivot on interest rates.
Yeah, and you think maybe as soon as next month?
Historically, when the Fed has signaled a change in policy at Jackson Hole, which he did signal, they've, to my knowledge, have always followed through on that. So I would guess that would be the case. I don't want to speak specifically on monetary policy. I certainly understand the president's frustrations. But if you look at how the markets behave following the chairman's comments last week, they were expecting rates to come down, and there's like an 85-90% chance that it happens in September.
So that now famous tour of the Federal Reserve remodel, in which Jerome Powell said to the president, well, we still think interest rates have to stay where they are because inflation may be coming. This is now an admission he was wrong and should have done it sooner?
President Trump looked unbelievable with the hard hat on. He's very comfortable. He knows how to build things. Here's what we know though. He knows how to build, and that's important because from an economic perspective, we call that supply side economics. You want to be able to increase the economy's ability to produce the goods and services that people want, that businesses want. And when you do that, what you can have is very strong growth and low and falling inflation, just like we had under President Trump's first term. And if you remember, way back in 2018, the president argued very loudly, and nobody believed him at the time. He was exactly right. I sound like a broken record, but wanted to get interest rates down and said rates should come down, and then rates did come down. So we'll see what happens going forward, but I wouldn't bet against President Trump.
I'll close with this question, Mr. Lavorgna, and that is the biggest maybe if you want to say impediment to this economy taking off like a rocket is what? Is it interest rates? Is it inflation? What do you think is the linchpin to really make this thing go nuts?
We've got the one big beautiful bill, so the forward is great because the companies now are going to start to build those factories. If you look at the Fed's official forecast, rates are high, very high relative to their own admission. With inflation coming down, I would expect that as interest rates ultimately fall, broadly speaking, that will give the economy an additional added lift so that it can grow at its full potential. This golden age does need some help when rates, one could argue, not me specifically, but by the Fed's own calculations, rates are restrictive, meaning they are too high relative to what the Fed's estimates of a neutral, meaning a rate that doesn't either push the economy up or pull it down. Rates are high relative to the Fed's own admission.
Okay, and so you believe that interest rates, that's the linchpin, that's what will make it skyrocket?
That would certainly be a factor, and also just some time with President Trump, getting energy prices are down, gasoline prices down 20%, energy, broadly speaking, is down 5%. That's a huge tax cut for U.S. households and businesses. So as President Trump's policies get into place and become ingrained and companies start to behave now that everything is solidified, that makes us very upbeat. We can generate really good growth.
Companies needed certainty, and they didn't have it.
They needed certainty. They're getting the certainty on the tax bill. That came when the president wanted. They're getting certainty on the trade deals. So everything is lining up for a golden era.
And just like Reagan, it took a minute. It didn't happen overnight.
It didn't happen
takes
overnight, but the economy bounced back very quickly in the second quarter. Again, there's a lot more clarity on the trade. We've got the tax deal. The president is an optimist. He wants all Americans to do well, especially Main Street, which suffered disproportionately over the last 4 years when inflation got to a 40-year high. The middle and lower class people are the ones that suffer when inflation is high. It's not the well-to-do. It's not the rich. They could buy assets and commodities and things like that. The poor can't. And those are the people that President Trump really did very well under his first term. That's what he wants to have a second go around. And right now we're seeing a real blue-collar boom because the cost of living has dropped very dramatically under President Trump. So I could see why people are optimistic, why the markets are optimistic. So hopefully we'll get rates lower over time, and you're going to see the economy really boom.
Sky's the limit, and it will be very, very helpful, I think, to Republicans in Congress who are running for re-election to be able to go home and say, this is what we ran on, this is what we delivered. They need that win.
The president has delivered on lowering the cost of living. He's delivered on the border. He's delivering on these trade deals with the help of Secretary Besson, Secretary Lutnick, and Ambassador Greer. We're getting a lot done.
The House Republicans have a story to tell if they tell it correctly. Joe Lavorgna, if they tell it correctly. Thank you for your time this morning.
My pleasure. Thank you.